PGG Wrightson's a New Zealand stock that at the moment, is it a good buy or not? Well, let's check out the history of PGG Wrightson, look at what the stock is doing in terms of net income, PE ratio, market cap and so much more, and then my synopsis if you think buying it or not. PG Wrightson Limited is an agricultural supply company, business that is based in New Zealand. It was created as a merger in 2005 through Pine Gould Guinness and Wrightson Limited joining forces. This company has been around for a very long time, with stocks and stations agencies dating back to 1861. It is one of the major suppliers in the agricultural sector in New Zealand for countries all around the world, with providing seeds, grains, livestock, irrigation, farm equipment, insurance, and financing. Although it's listed in the New Zealand X Index, it also has a majority stakeholder, Agria Corporation, since 2011. So that's a little bit of history of PGG Wrightson, how they came about. Now let's have a look at the CEO, Ian Glasson. In 2017, he was appointed PGG Wrightson's CEO. March 2013, Ian was the CEO of Zulig Agriculture and Gold Coin. Gold Coin manufactured and sold animals and aquafeed from over 20 mills operating in 10 countries, including China and throughout Southeast Asia. Mr. Glasson also has a long career in food and agriculture in Australia and overseas. He has held MD's Rabo Management Limited, a private equity funding firm that specialises in food and agri-business investments. He spent 9 years at Goodman Fielders, a food ingredients business, and was CEO of Wilma Sugar Business, while also being around the oil and gas industry for a long time, including in the United States with Exxon. So that's a little bit of the history and what the CEO has been all about before he arrived at PGG Wrightson. Now let's have a look at the stock itself. So the stock has been around since around 2000, starting off at about $4.60. But by July 2008, it was flying towards $22. Then all of a sudden, it crashed and burned, all the way down to $3 within the next 4 years, and slowly just staying steady. There was one big jolt in 2019. That must have been a very good time for the business, where it all went gangbusters when everyone was buying stocks and everything, obviously before the Rona, I would have suggested there, and then it crashed and burned back to now where it is again, around the $4 mark. So is this a good investment? Well, let's have a look at some of the key indicators here. We've got the market cap of $351 million, which is quite low. You've got a PE ratio that's outstanding at only 12.6%. Earnings per share of 36 cents. A dividend yield of around 9%, which is very good for the people out there looking for a dividend, especially for you out there that are 65 plus, looking for a stock to retire in. If you aren't in the stock already, it's a decent stock to look into for retirement. Well, let's have a look at a bit of the financials of the company. From last year, December 2021. They had a revenue of $276 million, which was a 10% increase from the year before. The net income, which was very impressive for the quarter, at $11.25 million, which was a 32% increase from the year prior. A net profit margin of around 4%, which was also an increase of nearly 20% from the year before. So what does this mean for the company? Is this worth to buy? Well, PGG Wrightson's been around for a long time, but as you've seen, it has flown from $21 back down to $3 and flowing back up to about $19, $20 again for only a little while before the Rona, and then it skyrocketed back down to $3, $4. This looks like a stock that is not going to be a super winner, but in terms of a dividend, this is where I'll be buying it for. Not financial advice, but dividends are decent ways to make money, especially if you haven't got a lot of money and you want to keep reinvesting into stocks. This is a good way to do it. Now, dividend stocks generally don't go up as high as growth stocks or the NASDAQ stocks in America, but the dividend stocks are generally pretty reliable most of the time. Obviously, the risks here is dividend can get cut at any time, as we've seen, well, a lot of people have seen over the Rona. If you're new to the channel, dividends have been cut over the last couple of years, especially the stocks like Disney, Carnival Cruise Lines, the cruise ship areas, all these companies, oil gas companies have dropped their dividends as well, or cut their price in half, which has led to people selling off shares in those companies, which has cut these companies like 50% of their market cap or even more. And at the moment we've got a downturn in stocks, especially in America. New Zealand is holding up quite well at the moment, so you could question maybe the prices aren't that great. If I was looking to buy into PGG Wrightson, if I was looking at a price range to get in, I'd say anything under $4 is a suitable price. At the moment, it's gone up quite a bit to around $4.60 at the moment. But for me at the moment, in this uncertain times, getting some dividend money is very handy. So I'd be putting some money in at the moment. And as the house prices continue to go down, it could be a good investment into the house prices right now here. For people in New Zealand, as the prices have been going down, as there's not been as many buyers. But you also got to be looking at that interest rate, because that interest rate is going to skyrocket, I believe, the way the markets are looking at some point. And especially if America goes into a crash, it will overflow over to New Zealand and Australia. Well, that's a bit about PGG and Wrightson. Full disclosure, I own a little bit of the stock, not a huge amount in my portfolio as yet, but I am currently looking at buying more in while I've got the opportunity. To me, it'll be a nice solid stock for dividends for a long time to come. Looking into the future, where's the stock price going to be? I don't know if it's going to be a home run at all. To be quite honest, New Zealand is a small market. Unless the agricultural business goes skyrocketing, which it could. It could at any time, as it's seen a couple of times. It's had big rallies. And that's probably a good time to sell out some of your position. If you get a rally, if it's 5 years' time, it might be a good time to sell. But anyway, that's enough from me on this video. Barry Charles. I hope you've enjoyed this finance channel. Remember to subscribe and smash the like button. Take care out there.